Simon and I were recently looking at some data which almost knocked me off my chair, and that was the fact that only 20% of Australians own an investment property. Now, in today's video, we're going to talk about the different groups in Australia, why so many of us don't get past that property 2 mark, and some strategies and tips for you guys to be able to jump past that hurdle and really set yourself and your family up for that long-term financial freedom you're really after.
Yeah, man, these numbers are actually staggering that like such a small number of the Australian population ever gets past that 2 investment property. And, you know, it's funny, like actually thinking about this after looking at the numbers, when I think about the strategy sessions that I've had, it's actually, you know, kind of true. And I'm obviously talking to the more, more sophisticated, experienced investors. And it's very rare that I'm talking to people that have more than 2 investment properties. But you know, it's very difficult to actually achieve financial freedom from just 2 investment properties. So hopefully from today we can kind of, you know, take it to that next level, beat the averages and put yourself into that really, really small percentage or really small population of Australia that actually gets to that level.
I love it, man. So like we're data guys, and let's hook into some of this data first, right?
Let's look at it.
71% of investors, and investors only make up 20% of the Australian population. So 71% get to 1 investment property in their entire lifetime. 19% get to 2.
Yep.
6% of investors get to 3.
So let's look at that. Like 1 to 2 investment properties, you know, we're looking at 90%. 90% of all investors only ever get to 1 or 2 investment properties, which is crazy. So if you've got more than 2, you're in that 10%, which is wild.
It's crazy. And I just feel like we're just speaking to the people that are going into that space so regularly that I just thought, honestly, I'm blown away. Like I thought these numbers were a myth, but it's from the Australian Tax Office. So, you know, 3 is 6% of investors. 4, you're in the top 2%. When you get to property 5, you're literally sitting there in terms of 1% of the investment market and a fraction of the Australian population, which, you know, is crazy. And I get it. Like getting to 3+ properties, 2+ properties is hard work. Like there's sacrifice, there's saving, there's the mental breakdowns, there's the analysis paralysis, there's the freaking out. There's so many reasons that stop me and other people from continuing to move forward. But by moving forward and moving through that fear and moving through those challenges and barriers, like a lot can change for the better as well.
Yeah, without a doubt. You know, I was really enjoying the age group breakdowns as well.
This was crazy too.
Yeah, it was gnarly to see like that such a very small percentage of the Australian population get started at a young age, which, you know, is kind of odd for me to look at and hear as a young investor.
Because we work with so many of you guys out there that are below the age of 40, but only 15% of people that invest before the age of 40. So I wanted to say for any of you guys listening that are younger, like, fuck yeah, like keep doing your thing. You're absolutely crushing it and you're setting yourself up for a future that, you know, you couldn't have dreamed of.
You just don't know the impact at this point in time, what getting started below the age of 40 is going to do, below the age of 30, even better than that, because you're going to have multiple cycles. You know, we talk about this 18.6 year real estate cycle. Now, if you're not getting started until your mid 40s and you've got an 18-year real estate cycle, that's taking you through to basic retirement. So it's really difficult to, you really need to trade that cycle correctly if you've only got 1. But if you're getting started earlier and you have a chance that you're going to invest through 2 different real estate cycles, then it's easier to overcome challenges. It's easier to overcome adversity that comes your way, and you get 2 growth cycles as well.
Completely.
So it just is going to completely change your stars. And if you're getting started and you're, you know, in your 20s or in your 30s right now, you're not even going to be able to think about the position that you're going to be in the future once you've done this. But one of the videos that's coming up is actually where you could be in 20 years time from now if you invest today, which I'm super excited about as well. But let's actually break down the age groups.
Yeah, so, you know, like we said, you know, 1.6% of investors get started in their 30s, 14% between 30 and 40.
Under 30.
Under 30, sorry. 25% of people of the investors are in the 40 to 50 year age group. And then it's just the rest of it for people over the age of 50. Like, I was speaking to a couple yesterday, Wade and Nicole. Wade's from South Africa. He moved here with absolutely nothing, had to completely restart, had a business degree there, came and did like a carpentry landscaping apprenticeship here. He's been following our stuff for like 7 years or so, he said, which is longer than we've been producing it, so maybe like 6 years. But yeah, like he was saying that he's just bought 3 properties on the south side of Brisbane in an incredibly good school catchment area in the last 5 years. He's absolutely been smashing it. He's engaged us to help him with the 4th property because he thought the market's gotten too hot and the areas that he wanted to look at were no longer affordable for him. But what was interesting about this is I said to him, you're so early into your journey, and because of that, it is all still hard work. You've got to save every deposit. You've got to pay for renovations in cash. You've got to really be diligent with your weekly budget. And this is on the front of your mind because you're still building the knowledge and skills to do it well. But there will come a time, like we talked to another client a few weeks back, a Japanese Australian who didn't end up signing up. He owned, I think, 4 or 5 properties in Sydney, the guy that you got me to talk to while you were on holidays.
Oh, yeah.
And I burnt because I'm not as good at bringing people on as Simon was. But this guy had held these properties. He'd bought his first one at 18 and he was my age.
Yep.
He had properties, like 3 or 4 of them, that had $500K to $1.2 million of equity. The rent returns were ridiculous. And there will come a time for those of you that start before you're 40 where everything will become easy, where there'll be so much passive cash flow, where your holding cost will be lower, where you've got equity, where you can afford to sell a property to pay down some others. And that is why this video is so important. It's not just about the data and being part of a very small percentage of people that actually figure this shit out, but it is about what you can become by figuring it out.
The opportunity that it presents, because the reality of just holding one investment property is, you're probably going to be in a better position if you don't buy any investment properties when you retire. But, you sell that, you might double the value of the property, maybe just slightly better than that. Looking at the numbers here, only 40% of investment properties are actually neutral or positive cash flow, 60% being negative. So the odds are that it's unlikely that that property is going to pay you any positive cash flow throughout that journey. So, you're only really setting yourself up for a decent amount of capital growth to sort of live off. But if you can times that by 2 or times that by 3, then it's going to make that journey so much easier. And, once you get to that level where you've got a few investment properties, maybe 3 or 4 investment properties, then it makes it so much easier when you are ready to slow down, when you are ready to maybe transition and reduce your hours at work or go and start that business. It makes it a lot easier to potentially sell 1 or 2 properties to pay off the debt on 1 or 2 properties and then just live off that passive income from the rental income from the 2 that you hold on to.
I love that, man. So let's get into the nuts and bolts of this for a second in terms of, we're going to do this in future, as Simon said, but we'll talk about it now briefly. Let's say that you just choose to be, part of this 20% of Australians that invest and you just buy one. And let's say you pay $500K for that property in Adelaide today. And in 15 years' time, with it going up by 4.8% a year, it's worth $1 million.
Yep.
It's doubled in value in 15 years. And then in the 15 years after, it goes up by 4.8% again, which we're being very conservative here. It's now worth $2 million. So 30 years from today, you're sitting on $2 million, which is a hell of a lot better than sitting on 200 grand worth of super from your job.
Mm-hmm.
But what if you were thinking what if you owned 4 properties worth 500K theoretically today, so you're sitting on 2 mil. In 15 years' time with the same numbers, you're worth 4 mil.
Yep.
In another 15 years' time, you're worth $8 million in terms of your property assets. Now, I know that sounds insane, but that is like
a reality.
That's a reality that a few extra decisions could change your stars by $6 million. Imagine you had 3 kids, you have the best retirement and you retire at 50 instead of retiring at 75. And you absolutely live it up and you enjoy your life and you spend as much as you can, but then you pass on to your children $2 million each in cash once they sell down the 3 properties that are remaining.
I think that's what
insane.
we all want,
That's what we want.
We want to create that generational wealth. We want to make it easier for our kids to get into the property market, to set themselves up financially. Like, I know that is probably the number one driver of all the people that I work with. It's you know, if most people that we work with are families and they want to set their families up, make sure that they can retire early to spend more time with their kids, but then also make sure that when they no longer need the properties or no longer need the income, they hand the properties over to the kids, and that is just such a leg up into the market. Because while if you buy them today, you know, your 500k property today that in 30 years time is worth 2 million, it's like in 30 years time your kids are going to be having to pay the $2 million for the property that you paid $500,000 for. So you've got to recognize, that's going to make, it's going to become, it's always been hard to buy real estate. It's never been easy, but you know, it could get harder with the way that things are moving at the moment. So just making it a bit easier for the kids in the future is going to make life so much easier for them.
For sure. So like, I want to both ask each other the same question, because Simon helps people get educated on the market and come into the business. And then once people are in the business, I help them get more educated on the market and get really, really clear about their next step and their plan for the next 12 months to take advantage of conditions. So
their personal situation.
You know, you talk to more people than I do on a weekly basis. Like, what do you think the major reasons are in the 3,000 conversations that you've had in the last 5 years as to why people don't move past property 2 or even don't move past property 1?
I honestly think it's I'm going to be brutal, but it's excuses most of the time. It's finding some sort of excuse to not take any action. That's the number one thing. But I call those excuses life, because life happens. You know, you may lose a job, you may change careers, you may, you know, unexpectedly have something happen to you. Kids may come in and you may not feel as though it's the right time, but that's life. It's going to happen. Things are going to change throughout that journey. But I really think the difference between the people that get there and the people that don't is those ones that are able to stay motivated and sacrifice for just just for a longer amount of time. So most people are willing to sacrifice for the 2 to 5 years that it takes to build up a deposit to buy their first property. Most people are willing to sacrifice that. Then once they've done it, they loosen up and they go, well, I'm going to spend a little bit more money now. Where those people that are able to take it to the next level go, okay, great, well, now I've done one, I need to move on immediately to the next one. So they maintain their spendings and savings habits. But because now they've got an asset, it makes it easier to get into the next one because they've been there, done that, they've got the experience. But I really think the difference between the people that get there and don't, especially the ones that I talk to, because I'm talking to people that are earning above the Australian average household income. I'm talking to people that are in solid, sound, secure jobs. So the only reason that they don't get past it is because they're not willing to sacrifice for that just little bit longer time to get into another property.
That's interesting, man. Like, I hear what you're saying. Like, you know, if you were to ask me the same question based on the people that I speak to, who are the action takers, like you guys listening to this, then I think excuses are actually just the surface level of fear.
Sure.
And I think if I was to boil it all down, and I used to think a lot more black and white than I do now, because there's so many complex reasons why not everyone can do this. And if everyone was to do it, then the value of property would be far less, because it's like, if everyone's doing the same thing, then
they're more educated and they know what to do.
So it's like there's value in property investing because not everybody thinks like this. And so because 80% of the market is just interested in buying their own home, or not even, like 70% of the market and 30% will always rent, there's this balancing act there, which is the most beautiful thing about it, on top of leverage. But if we get to like the nuts and bolts of the fear, it's normally, for me, orientated around the way that you grew up, or the people that you grew up with, and the mindset that they had, which fortunately or unfortunately they've like transferred unconsciously onto you. And the average mindset surrounding investing, because 80% of people don't do it, is they don't do it and their brain is trying to protect you, and they don't understand the difference between a property being a bear and a fucking bear being in the room with you. And so they're transferring their fear because it's unknown, like a bear is, and it's scary. And so they're like, don't do it. Transfer idea. And over time, if you've grown up with people that haven't done this and you haven't seen an example of it, or if you're just functioning in normal society with the average, you're just not going to have the conversations that are going to get there. Like,
man, it's so true. Like, now that you say that, like, it's definitely apparent in the way that I talk to people, because I like to get into that deeper level when I'm having these strategy sessions with people about, you know, their why, their past, what they see in their future, what they want, their values. And I think a lot of people that like are really ambitious, really motivated, you know, want to take this to a whole nother level, want to become in a very small portion of the population. You know, they've got great support networks. They've got a good community of like-minded people. Their parents, more often than not, or grandparents,
have bought one property,
have invested or ran their own business. And I think the conversations around the dinner table for years and years and years and years have been empowering, uplifting, motivating. You can do what you want. You can control your own destiny. You can do whatever you want. They're the conversations that the winners are going to have. And that's why it's such a small portion of the population that gets there. But then there's the ladder, obviously, as well, where people are surrounded by parents that hate their job, that are constantly talking shit about their colleagues and their boss, or, you know, having sick days at work for no reason, or, you know, using whatever excuse that there is. But that mentality, that mindset, those types of conversations that have been embedded to you from a toddler have a long-term lasting impact on the decisions that you actually make. Like, that's so true, man. I didn't even think about it.
It's wild. Like, it's so it's like, if you're lucky enough to grow up in a household that had investors around you, or someone in the family unit that had done well, lucky you. If you didn't, like, my dad started a business later, but when I was young, like, mum and dad were highly stressed around money. I made a decision at like 7 years of age around the table that I would change it. Like, that's how early I made that decision in my mind, that I was going to fucking sort it out, because I watched them whinge and complain, and I thought every argument was at that time of their lives surrounded around that particular issue.
Which most families do, complain and argue about money.
And I decided that I didn't want it. But as I've gone through this journey, time and time again, I've came up against the same thing, which all of you that aren't at Property 2 Plus are going through, and that is that voice in the back of your head, which is normally not your own, but it sounds like you, that someone else has transferred onto you. And it's just, there's got to be work, and there's got to be reps done to try and change the narrative of that voice. And then even more importantly, and this is what I think about a lot, I think about my grandma on one side of the family, lost her partner very young, 8 kids, single mum, had never worked a day in her life until her partner died, had to try and figure it out. All of those kids ended up okay, went and figured it out. Looking at them now, out of the 8 children, every single one of them has basically lost almost all of their money, because it's not just in the figuring it out and making it work part of the equation, but there's a second part. It's make sure once you've figured that out that you don't self-sabotage yourself and sell properties too early like most people do, and freak out when markets go bad for 5 years before they go good over 20.
Or not treat it the way that needs to be treated, which is like a business. Like, we talk weekly about our forecasts, our spreadsheets, you know, where we're at right now, what's going to be happening next. And we've got absolutely every single income and expense written down. We know exactly what's going on with the property, because we treat it like a business. We don't just buy properties for the sake of buying properties. We're buying properties to replace future income and to set our families up for a great life. And we treat that like a business, where so many people just buy a property because they think that's going to be the right thing to do, and then they don't track it. They don't think about, you know, all the holding costs, how to maximize the cash flow from the property, when you should be thinking about potentially selling or upgrading or you know, transitioning into another phase of your investment journey.
I love it, man. Like, I was talking to a great friend of both of ours on the weekend when we were up the beach. It was so nice, just full driving, snorkeling, hanging
Such a
out.
good weekend, bro.
And he said to me, like, he's 15 years deep into health, and he said there's only 4 things that really matter to him after listening to like all of this stuff around longevity plus short-term health: good quality whole foods, good quality sleep, regular movement, and if you're in pain, moving as much as you can without hitting that pain barrier where it's actually detrimental. And I went, that is such a simple way. Obviously there's social relationships and mental health and everything else and 1,000 other things you can add. But I think about this as well, like investors that get past property too, look at their bank account once a week. They know where their cost base is at and they put their surplus money towards something. They have a very, very, very clear vision of where they want to be in 15 years, which is financially free with choices. And those choices are to spend time with people they care about and live in alignment with their values. And on top of that, the most important thing, and I think the 4th thing, is they have the ability to delay the gratification. And they're not looking at what car they're driving today. They're looking at what car they could drive in 15 years with 200 grand a year of passive income and someone else paying for it. Or if they're like Simon and I and they don't care about that, then they're focused on, well, how much lifestyle, how much service, how much traveling, how much surfing can you do? How much time can you enjoy with your kids? How many times can you drop them off to school as the benchmark of success? You know what I mean?
Oh, bro, that's so true as well. And having that driving force, having that like why, having that thing that's going to pull you through is so important. So, you know, I think you look at any successful person, any person that gets into that very small percentage of the population that's, you know, elevated past the majority, is they find that reason, they find that motivation in anything. And what pops to mind is like Michael Jordan in The Last Dance, when he's constantly talking about these tiny little things that he'll hook onto to spark that competitive edge in him, to just give him that motivation, that killer mindset that he's just got to go out there and win at all costs. And I think all successful people, all people that get to that very, very, very like high level of success, is like they find those motivations, whatever it might be. Like Michael Jordan used like obviously a toxic sort of one and it worked, but you know, I use small mini wins as well. So like over a 12-month period, when I'm setting my goals, you know, I've got like daily goals, weekly goals, monthly goals, quarterly goals and yearly goals. And the daily goals are just little wins, like as small as making my bed every single morning when I wake up, having a cold shower more days than I don't in a week. In a month, it's like making sure that I catch up with my partner and have a really detailed review of our financial position. All of these little wins just constantly keep you motivated. And then like the longer term goals is like saving a deposit or building up some equity to move into another purchase, or, you know, for my next goals, it's building assets on the properties that I've already got, or knocking down, rebuilding. So it's constantly having that next thing to motivate you
forward, right?
Yeah.
You know, like they do talk in the Jordan doco a lot about that edge that he was able to find to compete on a week-to-week basis, but he also had a massive pull factor, which was, this could be the first and only time that this person in the audience is seeing me play. So I'm going to give them my best performance just in case they don't. And in the doco, you see the kids that are like, Mum asked us if we wanted Christmas presents or a ticket to come see Jordan. I'm like, it makes me emotional because it's like they chose that. And it's like that, when you can hook into like that much impact as your pull factor, like what is the thing that is going to inspire you to elevate through all the shit? Now, the excuses, right, or the fear that I talk about is disguised as information overload, thinking that you need more time to make a decision, overlooking at the data, your brain looking at too many things so that you don't have to commit to one suburb and following through. It's coming in tall poppy syndrome, short poppy syndrome. It's coming into who you hang around, the quality of your advisors, the team around you, the quality of the people in your life. It's your ability to save and budget. It disguises itself, your fear, in 1,000 different ways. You don't have enough time. You've just had a new bub. You feel twisted and you can't spend enough time with your friends. You're sacrificing this holiday that you wanted to do it will hide in 1,000
Whatever
ways.
it can.
And let me say this to you, as someone who's bought a bunch of properties and helped a bunch of other people do that too, that fear does not disappear.
No.
It doesn't go away. It just changes to the next thing that you're not used to. Like, okay, you pull that rock up, cool, I understand that I can get information overload when thinking about investment. Now that I'm aware of it, cat's out of the bag, it's not as scary.
Yeah.
It'll find a new bag to hide in, and that'll keep happening for the rest of your life because that's the human brain.
Yeah, and that's why we talk about in a lot of our podcasts, in a lot of our videos, like the value of understanding yourself, like doing your meditation, doing your mindfulness practices, or going and seeing a psychologist and learning more about your individual habits, your individual crutches to bear, so that you can identify these issues, recognize them as just a fear, just something that your monkey mind is hooking onto to avoid discomfort. And once you're aware of them, boom, you can overcome them. And that's why in our strategy sessions, we always address what's been holding you back from achieving your property investment goals until now. And we really unpack these things, because it's like awareness of the challenge, awareness of the fear that's holding you back is the first step to overcoming it.
Without a doubt. So, like, at the end of the day, you're going to do whatever you're going to do, but why not just do a bit better than that? You know what I mean? Like, why not just fucking go for 3?
Yeah. It's not going to be different. Like, as you said, you're going to feel the same. Property 1, property 16, you feel the same. I talk to our clients that have just bought their first property or just bought their 4th property, and I'm like, every time, I'm like, how do you feel? Everyone's like, oh, I feel the same. It's because, like, the journey, like, you're going to change throughout the journey. The destination isn't going to change the way that you feel. So it's like, you have that choice to be like, you know, it's like the Harvey Specter, you know, everybody's living here. I want to live up here. It's like, choose where you want to be.
You know, when I read this information literally 14 years ago, I made an immediate commitment in my mind that I wanted to be in the 1%. And when you look at that, that's the 1% of investors. You're at the like 0.0, like to get to 6 properties, you're probably more likely to get to the Olympic Games in your chosen sport. Like,
massive.
I wanted to be that good. Like, I wanted to be world class in this space because I always thought I could be, and I didn't know how, but I trusted that like one good decision would unfold to the next one. And that's what we want for you. We want you to move past whatever's happened in your past, whatever's happening right now, and whatever you think is going to stop you in the future, and just commit to making a better decision today that'll lead to a better decision tomorrow that will completely change your life 30 years from now. Like, what would your life look like if you never ever had to worry about work or your job again? I don't know, because I'm not there yet, but I can see in my mind what it looks like, and it looks like absolute freedom without giving a shit about the economy, without worrying about losing a job, without worrying about a coronavirus, without worrying about, am I spending enough time with my kids? Like, what would it look like if you just could completely step into who you're supposed to be? And this is why we invest. It's for that reason, because passive income plus capital growth equals choices, and those choices normally lead to you becoming a better version of yourself.
Dude, I love that so much. And, you know, what I want to add on to that as well is, you know, obviously getting to that point in your life is the goal, but another motivating factor for me is the person that you have to come throughout that journey to get to that point as well, because you are moving into the 1% of the population.
What did Jim Rohn say, man? Like, become a millionaire, not to become one, but for the person you have to become to be one.
Yeah, it's such an amazing thing, because I look at the person that I was 6 years ago compared to the person that I am today, and I don't even recognize that guy anymore almost. And I know in another 6 years from now, it's going to be something similar as well. Like, it's such an amazing, wild ride, but it's so enjoyable. And like, my life to date is constantly getting better and better and better because of this one rule that I have, which is continuous improvement, continuous learning, and becoming a better version of myself tomorrow than I am today. And it's an amazing ride. And it's like, you know, I set my first goal, which is I want to buy 2 investment properties. I did that. Now I've got 4. So it's like, things are going to change. And I didn't think that was going to happen. I didn't plan for that, but the journey allowed it to happen. And, you know, it's really helped, and now, you know, I can really see the forest through the trees, and starting to take a bit of the pressure off.
I love it, man. Like, I bought my first property when I was earning 45 grand a year. My second one when I was earning 45 grand a year. Then I went and made some money, but when I came back to buy my third, I was earning 45 grand a year again. It was like, just the excuses, they're just not real. It's just fear disguising themselves as like a reason. And I get it, but it's like, if we can work through it, like, you can work through it. There's information like these videos, there's our podcast, the Pumped on Property show, there's the Instagram, there's the Facebook. You know, why not give it a chance and follow it for a little while until you don't need to anymore, and then unsubscribe and unfollow? Like, use other platforms, other people, other businesses to build up until you're at a point where you're so full that you've heard it all and you don't need it anymore. Or maybe you do, because like the regular check-in's a good thing, but like, take advantage of it. So for those of you that are thinking about this sort of stuff, that are at 0, that want to go to 5, or want to go to 2, or at 2 and want to continue on the journey, we would love to offer you a one-on-one strategy session. Just jump over to www.pumpedonproperty.com, click that in, and you can talk to myself, Simon, or someone else at the team, where we'll talk about where you are, where you want to be, what's holding you back, like Simon mentioned, honestly, and then from there, educate you on the market, and you can go and smash it on your own, or you can become one of the extremely small number of people we work with each month and become a part of our family, our team, and walk together towards where you want to be in 5 years, 10 years, 30 years from today.
Thanks so much, bro.
Yeah.
Sweaty. So sweaty. Oh, that's good.